You bring home a massive paycheck every single month, yet somehow, by the time the next one rolls around, cash slips right through your fingers. Look at this diagram comparing a $500,000 income against the actual cash retained at the end of the month. According to recent data, 40% of Americans earning over $500,000 a year are living exactly like this, paycheck to paycheck. Earning $500,000 and still scraping by to cover your baseline expenses is a deeply stressful reality to wake up to. Today, we are diagnosing the specific financial traps draining high-earning households and laying out a strict step-by-step roadmap to patch those leaks permanently. Building generational wealth relies entirely on stopping systemic cash flow loss. A massive salary alone cannot save you from financial ruin if your systems are broken. Welcome back to Nikki Invest. I'm Nikki. Before we dig into the numbers, we have to agree on one foundational rule. Your actual wealth is determined exclusively by what you keep, never by what you earn. So let's put the earning potential aside for a moment and run a strict clinical audit on exactly where your cash is bleeding out. The first system we need to check is your budgeting and cash flow. The primary danger here is lifestyle creep. When your income rises, your daily spending naturally expands to cannibalize that new cash, resulting in nicer cars, bigger houses, and more expensive habits. The mathematical antidote to that expansion is the 50-30-20 rule. You strictly cap your absolute needs at 50% of your income, limit your wants to 30%, and forcefully route the remaining 20% straight into savings and investments. That rigid allocation leads directly to our second pillar, liquid reserves. A frequent mistake among high earners is becoming asset-rich but cash-poor. Locking your entire net worth inside physical real estate leaves you highly vulnerable when you suddenly need actual currency. You must hold 3 to 6 months of living expenses in a high-yield savings account. This is a bank account that earns a competitive interest rate while allowing you to withdraw your cash instantly. Without that immediate liquidity, physical assets become a trap. A sudden financial shock will force you to take on expensive debt, instantly threatening the wealth you've built on paper. The third system in our audit is debt management. This diagram illustrates the direct penalty of high-interest debt. If you locked in a mortgage during the peak rates of 2023 or 2024, securing just a 1% rate drop on a $500,000 home automatically recovers $263 every single month. You need to pair those structural stoatings with the debt avalanche method, aggressively paying off your highest interest balances first to minimize the cash you hand over to banks. Once the toxic debt is contained, we move to the final mathematical pillar, investing. This chart compares the exponential trajectory of investing $1,000 a month starting at age 25 versus age 35. Delaying just 10 years severely stunts your final balance by costing you decades of compound growth. But you put all that growth at risk through overconcentration. You should avoid allocating more than 10% of your total net worth into a single stock like Google or Intel, hoping to get rich quick. Instead, spread your capital across broad market index funds and maximize tax-advantaged accounts like your 401k, Roth IRA, and HSA to legally shield your money from the IRS. All of these systems ultimately depend on one psychological reality. Personal finance is roughly 80% behavior and only 20% head knowledge. Take a look at this volatile trading chart. Early success often breeds severe overconfidence, but the statistical reality is that 95% of day traders lose money over the long haul. There is also the danger of working yourself into the ground. Grinding 80 hours a week to stockpile numbers on a screen is useless if you completely sacrifice your youth and physical well-being. Mathematical wealth only translates to a good life when you shift your behavior to value your time and meaningful experiences over the mindless hoarding of cash. Let's lock in your 5 core mandates. Control your lifestyle, stay liquid, optimize your debt, diversify your investments, and fiercely protect your time. Here is your exact prescription task for today. Log into your financial accounts and run an audit on the last raise you received. I want you to commit right now to capturing at least 50